How to avoid costly inherited IRA RMD errors. Are you worried about making mistakes with required minimum distributions from your inherited individual retirement account? You're not alone. Many people find this topic confusing, but understanding the rules can save you from expensive penalties. Let's break it down step by step. First, it is important to know that required minimum distributions are mandatory withdrawals that you must take from an inherited individual retirement account. If you don't take them, you could face hefty penalties from the Internal Revenue Service. Starting in the year 2025, most non-spouse beneficiaries will need to follow a 10-year rule. This means you must withdraw the entire balance of the inherited individual retirement account within 10 years of the original owner's passing. This is a change from previous rules that allowed beneficiaries to stretch distributions over their lifetime. Now, if you do not manage this properly, you could end up with a larger tax bill than expected. For those who inherit from a spouse, there are more flexible options. A surviving spouse can choose to treat the inherited individual retirement account as their own or keep it as an inherited account. If they treat it as their own, required minimum distributions will start based on their own age. If they keep it as an inherited account, they can delay required minimum distributions until the deceased spouse would have reached the required beginning age or follow the 10-year distribution rule. Non-spousal beneficiaries must take annual required minimum distributions during the 10-year period, starting from the year after the original owner's death. If you miss a required minimum distribution or withdraw less than required, you could face penalties of up to 25% of the missed amount. To avoid these costly errors, start by confirming the date of the original owner's death. This date is crucial for understanding which rules apply to you. Next, identify your status as a beneficiary. Are you a spouse, a minor child, or another type of beneficiary? This status will determine your options and timing for distributions. Calculate your required minimum distribution amounts accurately each year. You can use the Internal Revenue Service life expectancy tables or the 10-year rule as applicable. Make sure to take your distributions by the Internal Revenue Service deadlines, which are typically December 31st each year. The first required minimum distribution may have a different deadline, so be aware of that. It is also wise to consult a tax professional or financial advisor who understands inherited individual retirement account rules. They can help ensure you are compliant and can optimize your tax outcomes. Keeping thorough records of all distributions and communications with your individual retirement account custodian is essential. By understanding these rules and taking action early, you can avoid costly penalties and manage your distributions in a way that meets your retirement income needs.